Welcome to the Property Playbook. My name is Andrea Robson with Motor and Realty, and I created this playbook because I believe that real estate is a game of strategy. The Property Playbook is where I will interview professionals beginning, during, and after your real estate transaction. So first, I will be interviewing Stanley Wade with NorthPointe, and he will be giving us advice about buying land, and then after you buy the land, what to do with it. Hi,
Yes.
Stanley.
Hello, Andrea. How are you today?
I'm very well.
Good.
How are you
good,
doing
good.
today?
I'm doing fantastic. Thank you for having me on.
Yes,
I appreciate it
of course.
very much. Absolutely.
Of course. So thank you for coming. I'm going to dive right into
Okay.
it because I know you are a busy man.
Sounds good.
So first and foremost, what is the overall process of buying land?
Okay. So buying land today is actually can be a relatively easy process. Obviously, today we're only financing residential land. So the zoning has to be residential, and we'll finance up to 50 acres today that you can purchase. So long as it's single family and for the use of single family in that regard. But once you identify the land that you want to have to build on, that's what we're going to be initially looking at today. Is it the zoning? Is it residential? Is it mixed use? Is it light industrial? We see some different types in that regard. But today is going to be single family that we're going to be doing today.
Okay. So when it comes to purchasing a single family, land for single family homes, are there different types of loans that you would recommend? Like, can you use a conventional loan, FHA loan, or is there another one that you would recommend instead?
So as a normal rule of thumb, Fannie Mae, Freddie Mac, FHA, they don't offer land financing. So banks have to do that on a boutique basis in that sense. So we're one of the lenders that offers a particular product for vacant land.
Okay.
So we do land only financing. So in getting it, you won't be able to get it. Now you can use it for conventional financing later on once you get ready to build on it. But initially, getting a land loan is going to be a particular lender that's offering that. And we're one of the few in this marketplace that's offering land financing. So
what you're telling me is you have a specific type of loan for land, and then after you buy the land, let's say you would like to build on the land, then you can go commercial, then you can go FHA.
Exactly. Yes, that's exactly right. Yeah. So first step is acquisition, acquire the land. So today we have a product you can either do we don't have what we call 30-year fixed financing because typically it is not designed for you to keep it for a long period of time. It's just for you to acquire it. And then once you decide what you want to build on it, then come back and get a construction loan to build on it. So we can do what we call like a 10-year arm. We can do a 7-year, a 3-year, 5-year, and a 1-year arm. Today, I'm selling probably more product than anything else is a 7-year arm. So the 7-year arm means that it is amortized over a 30-year period. Okay. That rate is fixed for 7 years.
Yes.
At the end of the 7 years, it becomes a 1-year adjustable loan.
Okay, so the arm is adjustable rate mortgage.
Adjustable rate mortgage. That's exactly right. An arm is an adjustable rate mortgage. Yes. Yeah. So typically today, and right now today, we're requiring 35% as a down payment. So and doing vacant land today, if you're buying just land right now, you're going to build later on. So 35% is going to be your down payment that you have to come up with. Minimum credit score for us is going to be a 680 credit score. Okay. It's going to be the minimum requirement. And then lastly, the other basic thing is going to be you have to have 6 months in reserves of the payment. Okay. So if that payment is $1,000, then you're going to need to have $6,000 in addition to the 35% down and the closing costs.
Okay, so it will be 35% of the land cost.
The purchase right. Yep. Yeah.
Perfect. Okay.
So 100,000, then 35,000 down, 65,000 is going to be the loan amount that we're going to give you for it.
Okay.
Yep.
Okay.
Yeah. So let me just kind of help a little bit more in that regard. So typically when people are acquiring land, first they haven't designed their plans, they haven't got the building permits, they haven't figured out what style of design they do want to put on the home, and may not have found a general contractor. But they saw the land, they said, this 5-acre parcel in Charlotte is what I really, really want. And so as a result, I'm going to buy it now. Okay. And then I've got a year or 2 or 6 months to figure out who I want to use as an architect, who I want to use as a builder, and kind of come up with terms and the style of home that I want to build on it. A quick example, I saw a vacant lot in the university area I wanted to build a ranch on one level.
Yes.
And so the builder says, we have to determine if whether or not it could be a half acre, but how is it configured? Is it rectangular? Is it a horizontal? Because you have to have enough land to be able to put a ranch on it because you're building out as opposed to up. A quarter acre, you can build a 2-story home with no problem at all.
Correct.
But you probably can't put a half acre on it based on that if it's that size. So as an example, that's the time frame that you're waiting to determine what you're going to build on it. So once you do, then you come back phase 2 and get your construction financing. So typically customers will come back to me and says, okay, now I'm ready to build. Can you give me a construction loan to build on it?
Okay.
So
in your opinion, do you believe that he or she should find a builder first and then find land, or find land and then build?
Great question. I'm almost inclined to say I do both at the same time. If I have a desire that I want to build a home, then the basic idea is going to be where, right? What area?
Yes.
So then I'm talking to you about I want to build it in the Palisades. I want to build it in Belmont.
Okay.
So I want an acre. So you start looking for me for an acre in those areas. Then I'm in turn saying, I'm going to have a conversation with a general contractor and with an architect saying, I want to build a 5-bedroom ranch. I want a 5-car garage because this is what I want to do. So whatever my dreams and visions are, right?
Yes.
I start with that. And then somebody starts telling me the price. And then it kind of starts massaging it together. But then too, as you're looking for me, you might say, hey, I found a great parcel, but you got to move on it now. So therefore, I might not be ready yet. So then I'm going to make the acquisition of the land first, then come back and finish my plans.
Okay, so you don't have to immediately build on the land once you purchase it.
No, you don't. As a matter of fact, you have 5 years with us.
Okay.
You have 5 years to build on it.
Okay.
So we're no rush. There's no prepayment penalty on it, but we're going to give you 5 years. At that point in time, we believe you should have made up your mind what you're going to do. Right. Exactly. Well, you'd be surprised. You'd be surprised because the ideas and plans change and life happens and et cetera, et cetera.
Right.
So yeah.
Right.
So you have 5 years. So the question is, would I do them both? I'm kind of like, if my initial vision is that I want to build a house. Yes. All right. I should start gathering as much information as I can. But yes, I'm going to pick up the phone and call my realtor and say, hey, listen, Andrea, we had this conversation. We want to sell our house. We want to build something else. We think we want to go to Marshville.
Okay.
Then he says, okay, let me start looking up and see what I can find here. While you do that, then I'm going to start making phone calls with architect and builders saying, hey, listen, do you build there? What do you build cost? They said, what style of home you want? You want a Spanish style? You want stucco? You want this? You want that? Right. So now I want a custom home, right?
Yes.
And so, and then also too, my money's going to determine where I go as well. So yeah.
Correct.
So
yes.
Yeah.
So when you're like, let's go back to the example where the land was $100,000,
okay.
and we would have to have $35,000 saved and reserved, and then additional. You said 6, correct? Because it's
6 months reserved.
6 months reserved.
Yes. Yeah.
Okay. So is it 6 months reserved from the $100,000, or
it's just of the payment? So 35% is your down payment.
Right.
Then you're going to have 6 months in reserves of the payment. So if the payment is $1,000 a month, you need to have $6,000 in reserve.
I understand. Okay,
And you can use a retirement account to act as it. No, you're fine. Yeah.
Okay. So all of that is still like a great sum of money. So do you know if you offer any? Because you hear down payment assistance.
Yes.
Throughout the real estate world, so do you offer that for land, or is that only for property? That's
only for property. Land, there's no DPA assistance and nothing like that, because and more importantly, the risk is greater on it. So and the rate's going to be higher on vacant land. Right now today, we're hovering around 10% because it's just vacant land. And if you change your mind and you don't want to do it, we're kind of just stuck holding a lot. Right, exactly. Correct. And depending on what the value is and what you want to build type of thing, that may determine it. And so no, there's no assistance. Let me back up and say this, right? We're talking about purchasing land independently.
Yes.
The other idea, or the first idea I think is the best idea, is I would identify the land that I want. I would also then find the general contractor, get my plans and permits, and then I in turn then would say, okay, you can buy the land and do the construction loan at the same time. And then your down payment is only like 5 to 10%.
See, now that's a different percentage.
So it's a function of having to find it at the same time. So if you can find your builder and says, I want to build this house and it's going to be $400,000 in build cost and the land is $100,000, so that's $500,000.
Yes.
We'll finance 95% of the $500,000.
Wow.
If you do it simultaneously.
Yes.
But if you do one, then come back 6 months, a year later, then it's two different transactions.
I understand.
So ideally, we would prefer it to do them both at the same time.
Okay.
Easier idea.
It's a lot easier. A lot easier on pockets, mindset.
Yes.
It's a lot easier.
All of the above.
Time.
All of the above, especially if your thought process is to do other additions and furniture, etc. when you move in.
Yes.
So
we have a shop.
Got to. Yeah.
Okay, yes.
Having built a couple of homes, I know how that works. Yeah. So, yes.
Okay, perfect. Okay, so we go through the process. I buy the land. I'm so happy in Morrisville. I bought my land. And we're buying it at the same time.
Yeah.
So is it a construction permanent loan? Like a construction to perm loan? Is like that how that type of loan
Great question. All right. So you have two options: a construction to perm, meaning that I got a construction loan and it is at one set of terms during construction. That may be 12 months. When the house is finished built, it automatically turns into a permanent loan.
Okay.
So that's what a construction perm is. There are some folks who just get strictly just a construction loan, build the house, and then they're going to go shop for different terms once they're done. So in this environment, in a high interest rate that people believe rates are going to come down later on, some people are opting just for a construction loan.
Okay.
Because if I take a construction permanent, I'm locked in. So at today's 7% for a construction loan, right?
Okay.
Conventional loan. So if it's 7% today, but a year from now, right. If a year from now, if rates are better, then they may be at 5%, but they lock themselves in at 7%. So then I want the option of being able to refinance, and some of them come with options, and ours do as well.
Okay.
That I want to refinance into the 5-year, and then of course lower my payments and terms. So that's the one that's a modification, or I should say, the construction perm.
Okay.
Then a straight construction loan is somebody says, I just want you to build it for me. Tell me the cost to build it. Then at the end of the 12 months, in some cases they only want construction loan because some people may have, if this is a move up house. Second home, third home.
I understand.
I'm going to sell this other house. I'm living in it now while it's being built. But when it's finished, I'm going to sell it. I'm going to have enough cash to pay the loan in full.
Oh, that's true.
And so therefore, I'm going to pay it off when I get done. So that's the idea for that too.
And you hear all the time, it's like, well, what's the point of renting? What's the point of buying versus renting?
Right.
So if you buy a home in this type of scenario, kind of like your first time at home, you'll be able to use that money to possibly buy land and build your own custom home.
Absolutely, yes, yeah. So especially with equity appreciation today with homes, it's a great idea if you're looking to buy something later on. You got the equity in the home right now today, take it out, purchase, buy the land, and then 2 or 3 years later, build the house you want to build, and then, say, and if you say this is going to be my departing residence, I mean, the house I live in right now today, I'm going to sell this house as soon as this house is built.
Yes.
So therefore, they won't count this debt for you in that regard, so long as it's going to be a departing residence. And then, I've done a lot of those, and typically it's happening with baby boomers. Right.
Okay.
So they're getting ready to downsize.
Right.
They've got a house and they want to go to the lake, but they don't want to have to pay as much for it. The house that they had, it was a family home. Now they only need 2,500 square feet. The previous house was 4,000 square feet. So therefore, they're going to sell it, probably have a good amount of cash because they've owned it for 10, 15, 20 years, and then they're going to pay that mortgage off completely. I've done that a couple of times, like a couple that moved from Charlotte to the beach.
Okay.
And by the time the house was finished built, they had sold their home, getting ready to move into the new house. They paid the loan off. Yeah, so
to the beach.
Yeah, to the beach. Amen. Yeah, they moved to Charlotte. So yeah.
Wow. Okay. So when it comes to that, well, that's kind of like a whole different conversation. But when talking about like HELOCs and home equity loan, but if we want to touch on it, just in case we have people who are currently owning a home, maybe they want to pull things out of HELOC or home equity line of credit. I mean, that's HELOC. If they want to take out a home equity loan, which one would be better for them?
Obviously, it's funny. I had a conversation with a client in the car on my way over here now.
Okay.
And I told her I'd call her back and we'll talk about it, which may be best for her. I have some clients today that said, I don't want a line of credit because 9 out of 10 times their line of credit is going to have an adjustable rate, not going to be fixed. It's going to be tied to prime. It could be 9, 10, 11% interest rate. Whereas a HE loan is going to be a fixed 15-year term. I did some last year at 8% on a 15-year fixed. Okay. The line of credit is at prime plus 3. It might be 11% interest rate. Prime's coming down some. So those are the differences. And so even though this is a line of credit that I might want to continue to use, for example, the lady says, I just want the line of credit for right now. I'm not going to make a purchase. I'm going to make one 6 months later. I'm looking for an investment to buy. Okay. I'm going to take my down payment from here. So I don't need the money right away. So I don't want to take it and be paying interest on it. That's the line of credit. That was a benefit. Okay. Whereas the other couple says, I've got $25,000 in credit card debt that I want to pay off. I need the loan right now to pay them off.
And it's a specific amount.
It's a specific amount. Exactly. So I gave $50,000. They did what they needed to do, bada boom, bang, and they were good in that regard. So they wanted to fix it, tie it in, so they want to focus and pay it off as soon as they could.
Okay, so that should be a good episode I should talk about, is the difference between home equity loans and home equity line of credit. They're really similar, but they're definitely different.
And purpose, right, determined. So sometimes if there's a home improvement project that you want to do, that they're going to be adding on, or they're going to be, they want to remodel and buy new furniture. And so that happens over a 6-month period.
Yes.
They just want the line of credit to be able to, and then later on, be able to access the funds later. Pretty much like a credit card.
Yes.
I want it, but I don't want to spend it now.
Right. But I know I'm going to need it soon.
Exactly. Yeah. Yeah.
You know what? This is great.
Thank you. I'm glad.
This is good information. Stanley.
Yeah.
Okay, perfect. So I really appreciate you coming to talk to me on the Property Playbook. But I do have one final question to ask you. How can people get in contact with you?
Oh, my pleasure. So you can find me, Stanley Wade. My email address is stanley.wade, W-A-D-E, at NorthPointe. And NorthPointe has an E on the end of it, northpointe.com. My phone number is 626 area code 234-3653. Again, 626-234-3653. Stanley Wade. And you can find me on social media. You can find me on IG, it is The Richest Man on Earth 1. That's my handle there. And the same thing, thank you. And the same thing on Facebook. I'll tell you the story next time she has me back about how I became the richest man on earth. So, yeah. But that's how you can find
about that.
Okay.
The richest woman.
Yeah, right. Absolutely. Yes, you can.
Perfect. Thank you so much. My name is Andrea Robson with Motor and Realty. And if you're in the market to buy or sell in Charlotte, North Carolina, feel free to contact me. And until then, I'll see you next week on the Property Playbook.
Thank you.